It's time for the No Nonsense Roundtable. Insights to capture your imagination from people you know and people you'd like to know about. Each week, a different guest from a different walk of life. Now, here is the host of the No Nonsense Roundtable, Dom Genova.
Well, welcome everybody for another edition of the No Nonsense Roundtable. If it's Saturday, it's the No Nonsense Roundtable, 10 to 11 right here on News Radio WHAM 1180. And anytime you want, you can hear the past shows on NoNonsenseRoundtable.com. And boy, do I have a great guest for you today. I have an individual that's going to help us sort out everything that's going on in the world. Stock market, sanctions, 401ks, explaining to us how the world is working now as opposed to the way it was working before, and answer our questions about everything financial in a serious way. And the fellow's name is, you've seen him on TV, and I'm sure you like him. His name is George Conboy, and he is, what is it, chairman? I'm the chairman. CEO of Brighton Securities, a very distinguished individual, and somebody who is going to, go into a lot of stuff for us today. So welcome, and thanks for coming here.
Well, thanks for having me, Dom. I'm glad to join you.
Well, let's start with having everybody know a little bit more about yourself, how you got to where you are, your education, just a short form of how you got to be chairman of Brighton Securities.
Sure. I'm a Rochester boy, grew up here, and went to RIT for accounting. I always say RIT taught me to add and subtract. And after I got out of RIT, I went to work for a local hospital as an accountant and spent the better part of a year doing that, or more than that, I guess. But after that, left to go into the investment business. And I worked for a large Wall Street firm. I trained on Wall Street. I worked on the floor of the New York Stock Exchange.
Oh, really?
All of that. And came back to Rochester and joined Brighton Securities in 1988, where I have been ever since.
So you actually walked on Wall Street on the floor?
On the floor back when, so here's how trades were
Oh, I'd love to hear. I would love to hear this because we see what's happening on the floor and people are waving and yelling and stuff. What is going on?
It looks like madness. I'm willing to bet it looks to people like what it might look like if you had an aerial camera on a casino. People weaving around, waving their arms. On the floor itself, always quite calm, no big deal. And you'd always see papers all over the place. Back then, what would happen is two traders would come up and talk about, I've got 10,000 shares of 3M, and do you want to buy this and that? And make the deal, and there'd be a man standing there. It was always a man back then, with a pad that looks like one of those little pads you fill out to buy a lottery ticket.
Okay.
And he'd have a pencil, and he'd make a mark on this in the ovals, and there would be slots all over the place. He'd feed that into a slot, and a reader would read that transaction, and it would be reported. Now, almost all of it's done by computer now. There is a little bit of human interaction. But 40 years ago, that's how it was done.
Well, that begs a question, though. So you have a list of stock that you're representing, and somebody has a list of stock that they're representing, and how do you know who to go to? Is that
literally
how does that work?
It was literally that.
Really?
Those people you see on the floor of the exchange, there are several types, but you'll see circular booths, and standing around those booths would always be people, and they're called specialists. And a specialist would represent the shares of American Airlines and Procter & Gamble and 3M and something else. And so if you wanted to trade that particular stock, you would physically walk to that station, and you would not necessarily engage with the specialist. He oversaw trading. You'd wait for someone else to come up, or someone else would be there who wanted to sell what you wanted to buy, or vice versa. Now, it's all matched by computer now, but back then it was human interaction.
Oh, my Lord, that had to be, talk about stress, right?
It was very busy. Those guys made an awful lot of money. It was good.
Well, one of the things, I have to be honest, I am not a sophisticated investor. And you're saying, well, the Nasdaq is up and the Nasdaq is down, or the Dow Jones is up and that is something with the Nasdaq, and then you got the Standard & Poor's. Do these all have different attributes to them? Nasdaq is one thing, and the Dow Jones is industrials. How does this all work?
So it's converged a lot over decades, Tom. But years ago, the granddaddy of all the indexes, an index is just a basket of companies. And so we talk about the Dow, or the Dow Jones Industrial Average is what it's short for. It's an index of 30 stocks. There are 30 stocks that make up the Dow Jones Industrial Average, big names primarily. And there's a mathematical formula that calculates how these 30 stocks make up that index, which is today around 34,000. And so at the end of the day, the computers figure out what those 30 companies did, and that tells you that that index was up or down or whatever it is. The S&P 500, as the name implies, is an index of 500 companies, a more broadly based index than the Dow. So it's often considered a better broad measurement of the stock market. Although we can talk about why that's a facade and it's actually very tightly concentrated. That's a little known fact. The Nasdaq tends to be very technology weighted because it's focused on smaller companies that transact on the Nasdaq exchange. And so Nasdaq is a good proxy for technology sector.
So the New York Stock Exchange is Dow Jones and the Standard & Poor's are part of the New York Stock Exchange, and the Nasdaq is a completely different exchange?
Yeah, for the most part. Virtually all of the Dow stocks trade on the New York Stock Exchange. Many of the S&P trade on the New York Stock Exchange, but some trade on Nasdaq, whereas the Nasdaq composite is just made up of Nasdaq companies.
Is the Nasdaq new?
No, it's been around for a long time. It stands for National Association of Securities Dealers Automated Quotation.
Okay.
It goes back to the 60s.
Okay. I would never have thought that.
It doesn't mean anything to anyone.
Sounds like a Jeopardy question, if anything else.
Yeah,
right?
very obscure.
Yeah.
Save that for when you're on the Jeopardy.
That's it. Well, there's no chance I'll ever be on Jeopardy. So you're seeing these fluctuations now. I mean, it's amazing to me that one can be up and one can be down. The Dow Jones can be, I mean, I don't know what happened today, but the Dow Jones was up a little bit, and the Nasdaq was up quite a bit. Well, you have the figures right in front of you. I mean,
yes, I do.
We won't tell people when we recorded this, but right today, whatever today is, go ahead.
The Dow Jones Industrial Average up 1.5%. I'm going to give you percent instead of points.
Okay.
The Dow was up 1.5%. The S&P 500 up 2.25%, and the Nasdaq up almost 4% in one day.
So, but one of the things they talk about these days, because everything's going on so crazy in the world, is volatility. I mean, it's like a ride at an amusement park or something, for God's sakes.
Yeah. But what I want to stress is volatility today seems like a huge deal for a couple of reasons. Number one, the point numbers are a lot bigger. And number two, you see and hear and read about it all the time. It's on your phone, it's on the internet. So when I started 40 years ago, there was no cable TV, and there was, of course, no internet. So you would get your quotes in the newspaper, or if you happen to be listening to Wham, which of course is celebrating its 100th year, if you listen to Wham, you'd hear quotes at noon, at 8 a.m., and what have you. But there wasn't the constant stream of pulling your phone out and looking at it.
Yeah, I remember when I was calling on dealers back in the late 70s, early 80s. I had a dealer that you had to pause business with him because at 12 o'clock that he would hear what the stock market was doing that day. I also remember and it shows you how old I am. One of my high school teachers saying, "Well, Dow's at 1,000, and it's never going to get very much higher than 1,000, you know."
Well, let's talk about that.
Mr. Dalton, I remember. God rest his soul.
You and I are
Mr. Dalton wasn't right.
You and I were of similar vintage. So when I started, the Dow was roughly 1,000. Mm-hmm. And the big question was, will it get above 1,000? Will it stay above 1,000? That was Mr. Dalton's question.
That's exactly right.
But back then, here's what gives me a very good yardstick about volatility and why things aren't any more volatile today than they were then. And then we can talk about why when you want to. Back when I started, Dow 1,000. Not uncommon for the market to be up 10 points, 20 points, 5 points, or down as much. Well, think about that math. 5 points is 0.5%. 10 points is 1%.
Yes.
20 points is 2%. The Dow today up really big, up 1.5%. So we had the same volatility, but because the points were small, it didn't seem so dramatic.
Well, that's true. And we're about ready to head into our first break, and we're going to see everybody right after this. Well, you're back listening to the No Nonsense Roundtable. Thanks for listening. And we are talking to George Conboy, who is chairman of the board of Brighton Securities. And we were talking about the stock market and volatility and the things that are going on these days in the world. And here's the question that I have for you. I mean, most of our listeners are middle age and getting up there in years and whatever. And volatility in their market, in the 401k, the money that they have saved is probably most of the money they're going to have saved. Okay, and we see these things happening during the week, and the market's up and it's down. It's like a roller coaster, and I'm sure people are looking at this 2, 3, 4 times a day and getting some anxiety and whatever. And tell me what advice you would give to people in our age range.
So I want to preface any broadcast advice with a caveat that every situation is a little bit different. Every person's circumstance is different. What they need, what they want, a little bit different. But if we're talking about a general idea for folks who are 40 and up, 50 and up, what have you, I'd say a few things. One thing to consider is we'll always have volatility in financial markets, stock markets, bond markets, mutual funds, all of it. There will always be volatility. And you will always see declines like we see right now. People say, well, yeah, but what if it keeps going? What if it keeps going down and goes down more and more? It can, but realistically, think about a couple of things. If you're over 50, you've been aware of investing for maybe 10, 20, 30 years. Different for different people. And look back at your own situation. What have markets done over the last 10, 20, 30 years? The fact is, it's easy these days to go online and look at a chart of the market. When I spoke in our prior segment, I mentioned that when I started, the Dow Jones Industrial Average was 1,000. And today, it's in the mid-35,000 area. So what happened? It never went down enough without coming back up. Why is that? What are these indexes made of? The stock of companies. But these are companies that offer products and services that you probably used all your life and your parents used them. Hershey was selling chocolate bars before anybody listening to us was born. And the Ford Motor Company was selling automobiles, so was Chrysler, I might add. Mm-hmm. Although I don't think, no, Chrysler was not selling cars before WHAM went in business. The first Chrysler was 1924.
Ladies and gentlemen, we're talking to a car guy who is probably a much better car guy than me. Just as a disclaimer, go ahead.
Not even close to this car guy, your host here, but nevertheless, we both are. But realistically, Procter & Gamble's been selling soap and toothpaste and detergents for over 100 years. Hershey's been selling chocolate bars. And these companies have come and go through wars and depressions, through Democrats and Republicans, through good weather and bad weather, and they've managed to persevere through good management. We've lost companies that have gone completely bankrupt or have gone the way of, say, an Eastman Kodak, for example. Mm-hmm. But in the main, if you stay with the kinds of products and services or the kinds of investments that invests in the kind of products and services that you've used all your life, chances are pretty good.
Well, you're talking about, I mean, I assume you're talking about diversification too, because I mean, if you had all your money in Enron stock,
Yep, that's right. Or Kodak for that matter. That's our local example. Wonderful company that didn't treat anyone well if you owned a lot of that stock.
Well, there's some companies that transform themselves. I mean, think about it. I mean, I talk about it on the show all the time. IBM was the number one manufacturer of laptop computers back in the 80s, and they don't even do that anymore. Apple transformed themselves. So you have to look at the there was a article written years ago by a fellow by the name of Levine. It was called Marketing Myopia. I'm sure you're familiar with that. The railroads thought they were in the railroad business. No, they're not in the railroad business. They're in the transportation business.
Right.
So one of the things people are worried about right now is most naturally is inflation. Mm-hmm. Now, my feeling, and you can tell me if I'm right or wrong about this, inflation affects different people differently. And it has a lot to do with how many assets you have and what you're looking to buy. I mean, obviously, if you bought a house and your house is paid off, your mortgage rates aren't affecting you. The propensity to buy some goods that you don't necessarily buy when you're older than younger affects you. I mean, isn't that pretty much true?
No, absolutely true. If I think of the young people in our office who a couple of years ago were buying houses with a 3% mortgage, and now those who are looking to buy houses at a 4% mortgage are outraged. And realistically, it's 30% more than than you might pay for a mortgage for the same dollar amount borrowed just a couple of years ago. But you're grinning, big grin.
Yes, because I remember 14% mortgages. This is how old we are, right?
I owned a little house in East Rochester. I lived upstairs and I had tenants downstairs, and I was 21 years old and I was paying a 16.92% mortgage.
Oh, yeah, but your CD was getting 20%.
Yes, well, back then I had no CD. I had debt, debt only. I was paying the interest that helped pay people on those CDs.
Yeah, we just didn't. We just didn't know back then. But it affects you. I mean, if even 6% or 7-9% now seems like it's outrageous.
Right. Inflation will cut the heart out of the value of some assets, and it will mean your dollar is going to purchase less tomorrow. Because the same thing you bought today for $1, you're going to buy next year. It's going to cost you $1.10 or $1.20. And at that rate of increase, after several years, what you pay $1 for today will cost you $2 then. And if you only have that dollar, your purchasing power has been cut in half.
I have to ask you this question. I really do have to ask you this question. Maybe it's a personal question. But I was in a congressman's office. I was on the board of directors of the State Dealer Group for a while. I was in a congressman's office. He's not a congressman anymore, so I'm not going to get any trouble, okay? And he was saying, with our national debt, we need inflation. And we need inflation because I see the look in your eyes. He says because our children will be paying back the debt with dollars that are not worth what they are now. And I was looking at him saying, so we need more termites in the wood to make the wood easier to carry. Does that make any sense to you?
Your analogy of termites in the wood to make it lighter is a good analogy. So what he's saying is functionally true, which is to say, if I owe you a whole pile of money and I have to pay it back, and if I owe you $100 and we have a lot of inflation, I'm going to pay you 2-3 years down the road, 10 years down the road with inflated dollars that are worth less in terms of purchasing power. I bought something from you today for $100. I'll pay you back the $100 down the road with inflated dollars. Costs me less because with inflation I'm getting a raise or my assets are going up. But we're on both sides of the same transaction.
That's right.
We're paying the debt and we owe the debt. The problem with all that inflation, sure, it solves part of the problem of the national debt. It also means all of your assets are worth a lot less. So we're on both sides of that equation. It isn't any good.
Why, thank you. I thought I was right about that.
Yeah.
Because I'm thinking, well, you're paying more for gas or for housing and for everything else. In the meantime, and your money's worth less, yes, but this just didn't make sense to me. So
I've never met a politician. Sorry.
No, go ahead.
I've never met a politician whose economic judgment was worth the powder to blow it to hell.
And with that note, I will have to say that we're heading into another break, and we're going to come back on the other side. And I'm going to tell you right now, I'm going to ask you this question. I'm going to ask you one word when we come back, and the word is Bitcoin. Can you handle that one?
You bet.
Okay, and we'll see you on the other side of this break. Well, welcome back. We're listening to Mr. George Conboy, who is the chairman of Brighton Securities. And before we get more into some financial matters, I'd like to give a great shout out and thank you to the Bob Johnson Auto Group, who sponsors this show. Great place to buy a car, buy a truck, or get a car or truck fixed. Good people, and they have my recommendation. Now, Mr. Conboy, before the break, we already telegraphed what we're going to start talking about now, because I don't get it at all, not one little bit. Oh, there you go. Bitcoin. I don't understand this. It's a thing. It's not a thing. It's all in a server someplace. It takes up a lot of energy. It's not money, but it is money. Could you please tell me what's going on?
That's a big topic. And so we don't call it Bitcoin. We call it crypto because there are several.
Okay.
Just like you've got U.S. dollars, Canadian dollars, Mexican pesos, and so on.
Mm-hmm.
Right? So, but we can talk about Bitcoin. It is the preeminent form of cryptocurrency. Crypto is just short for cryptocurrency. And when you think about, well, is it money? Maybe it is, maybe it isn't. What's money is what you and I decide is money. So I was reading something the other day, and I came across a topic of Civil War tokens. And they were little copper tokens that looked like coins. Apparently, at the outbreak of the war, people started hoarding coinage because of the precious metals. Copper was considered a precious metal. And so storekeepers and businesses would print their own coins. And around town, I might be able to go into the Geneva saloon and pay with a little token. And it's money if I can walk in your saloon and buy a ham sandwich with this token and you accept it. If you and I say it's money, because for us, it worked. Now, we mostly want money where you can walk into Topeka, Kansas or Tampa, Florida, and use that money to buy something as well. So you want broad acceptance for money to really be money. And with Bitcoin, as acceptance grows, it gets closer to being a currency that's more broadly accepted. Well, what is it? It's just a record of you owning a dollar's worth, or one Bitcoin right now, I think it's $48,000 or thereabout, $40,000. You can own a tiny, tiny fraction of a Bitcoin. You don't own one for $40,000. You can own a dollar's worth, and it's a little fraction of that. And if you find someone else who will accept Bitcoin to buy whatever you want to buy or transact whatever you want to transact, you can, online, give to this other person your fraction of a Bitcoin to pay for whatever transaction the two of you want to do. But I see you've got a very furrowed brow, Dom.
I still don't get it.
That means I'm not giving a good explanation.
No. That might be I'm just dumb.
Here's the problem with Bitcoin. It's got an internal contradiction in my view, and that's this. When you think about, is it money, and how is it money, and how does it work? Normally, you think of money as being worth $1 or a euro, whatever it might be. And you know that if you want to buy that cup of coffee and the cup of coffee is $2, you walk in the coffee shop, you can use dollar bills or you can use a credit card. But a cup of coffee, it's $2. You can get it anywhere. Okay. And the next day when you go in, you're probably going to pay $2 for that cup of coffee. It might cost you an extra nickel, but it's going to be about that. $1 is worth about $1, and except for inflation creeping up over time, we have a reasonable certitude that it's still going to be worth $1 next week, next month.
Okay, I'm with you there.
With Bitcoin, the internal contradiction, in my view, is today one Bitcoin is $40,000. Well, if we go back, I had to make notes for this now.
Okay.
If we go back to November of 21, so what's that, 4 or 5 months ago, one Bitcoin was $65,000. So it's down a third in a few months. But if you dial back to December of 2020, so a little over a year, it was $33,000. If you go back to January of 2020, before the pandemic, $4,000.
What's making it worth anything? I don't get it. I mean, now dollars are based by the full faith and credit in the United States of America.
Sure.
Well, what is this backed by?
Well, this is backed by the fact that people want it. We were talking earlier about the used car market, and we talked about how used car prices, everyone knows, they're way up. Why are they up? The supply is what it is, and more people want them.
And what is this thing where you need all these servers and electricity and stuff to store it? I mean, what is that?
So what that is, you hear about Bitcoin mining.
Right.
That's where the servers come in. So where Bitcoin mining comes in, where you can create Bitcoin, is you'd have computers that do specific mathematical calculations related to buying and selling Bitcoin. Because if you think about it, I come to Dom and I want to buy something from you and I'm going to give you some Bitcoin. You say, okay, I'll take your Bitcoin. Well, how does that get recorded? We don't have a yellow pad where we write it down.
Okay.
We do it online. And the servers that are mining Bitcoin are the computers that are keeping track of the record keeping, very complex. But in order to have this system operate without a Federal Reserve or a U.S. Treasury,
right?
What happens is there's this worldwide network of computers that do the record keeping to keep track of Conboy giving Geneva a piece of a Bitcoin. And in exchange for them keeping track of this, then they are awarded a tiny, tiny, tiny sliver of a Bitcoin, fraction of a penny worth, for every transaction they keep a record of. And so that's how the system was designed to be its own ecosystem. These computers keep track and they earn a little bit of Bitcoin. Now, there's only ever going to be 21 million Bitcoin. That's a limit. And when that limit is reached, then for processing the transactions and record keeping, you, the Bitcoin transactors, will have to pay a small fee.
So there's only 21, is it going to be 21 million Bitcoins? Is that it?
21 million Bitcoin.
Well, how did that number come to be?
We're getting very arcane. But the guy who supposedly developed this thing, a Japanese guy who may be named Satoshi something, I forget his name off the top of my head, that was the number they came up with as a way of defeating inflation. Because if there's inflation, you can have billions or trillions of dollars, but there are never going to be more than 21 million Bitcoin. Now, you say, well, hold on. If there's 21 million and they're each worth $1, that's $21 million. But if they're 21 million and they're each worth $1,000, now that's $21 billion worth, and so forth. So the value can go up. The problem with Bitcoin for the average person is you'd like to think your dollar today will be worth about $1 a year from now. Bitcoin has been way up and way down. A lot of people don't want to use it because they're afraid that next week it won't be worth as much.
Okay.
Other people want to buy it because they're hoping next week it'll be worth twice as much.
It's just crazy to me. I mean, when you think about the whole thing in a philosophical way, I mean, you give numbers to somebody on a piece of paper, and he gives numbers back to you on a piece of paper. It's numbers on a piece of paper, but there's got to be some trust in there someplace. Now, the question I had that just came up recently is that now Saudi Arabia is thinking about using the yuan rather than the dollar. What would be the reason for that?
Well, the reason for that would be if they don't trust U.S. monetary policy, if they think there's going to be a lot of inflation, if they don't think the U.S. dollar will be as well accepted. I think it's premature to think the Saudis are actually thinking of making a change. I suspect that's a stalking horse to basically threaten us. You were in the car business. I might go buy a Ford, and you're hoping the guy say, "Oh, this Chrysler's a better deal." So it may not go that way. There's been talk for years that the euro will replace the dollar or gold will replace the dollar, but it hasn't happened yet.
I remember years ago seeing a 60 Minutes story, and whoever it was with the European Union was saying how the European Union was going to surpass the United States, and all these predictions that you see of either tremendous success or tremendous gloom seem to be an incredible thing. Now, I'm going to telegraph again when we come back after the break. We're going to be talking about what's happening now internationally, and sanctions, and sanctions going to work, not work, is it really hurting Russia, and I guess that's our new economic weapon these days, and thank God it's not something that blows up, but then again, who knows. So we're going to take a break, and we're going to be right back. Well, welcome back. We're talking to George Conboy, who is the CEO of Brighton Securities, and we're about ready to start talking about, the world all told, and a little thing called sanctions. And why don't you give us a little bit of your read about that? I mean, we're weaponizing our financial system. Isn't that pretty much the way to look at this?
I think that's a good way to describe it. The international banking system that allows for fund transfers is called SWIFT. And it relates to worldwide fund transfers. And Russian banks have been removed from the SWIFT system, making it difficult to transfer money into or out of Russia. And the reason for that, of course, is to say, listen, Russia, you've done this bad thing. We want to smack you. And so there are economic sanctions. We don't want to sell things to them. We don't want to buy things from them. And it's a very worthy thing to try. And if it has any effect on Russia and forces them to leave the Ukrainians alone, that's a wonderful thing. But the but is, when's the last time you turned something upside down and on the bottom it said made in Russia?
Right.
Virtually never, right? They buy some stuff from us. We don't buy much from them in the way of manufactured goods or even agricultural products. There's some agricultural products, not too much. But we buy an awful lot of oil and gas worldwide, and we buy certain minerals. I think a lot of palladium, titanium, a lot of nickel comes out of Russia. It's an extractive economy: oil, gas, coal, and certain metals, certain minerals. And that trade has largely not stopped. Certainly the oil and gas trade has not stopped. And so the SWIFT system is still being used to pay for oil and gas transactions, and I think some mineral transactions. So I think the sanctions are meaningful, but that's like saying, I'm going to curl up my fist into a giant fist. I'm going to smack you. I'm going to smack you in the upper arm. It's not the same as being smacked in the head. You don't want to be hit, but it's not the same.
Well, I guess, I mean, the Russian economy is, I mean, people look at the size of the countries, they think they're equivalent. I mean, the Russian economy isn't anywhere close, right?
No, it's like the size of the economy of Arkansas, which is not to say anything bad about Arkansas, but Russia is a big, big landmass without a big economy, without a lot of people, a lot like Canada.
Well, the thing that I look at, so the people there are under this basic dictatorship, and they're being told what they're being told without having any outside information. Sure. And so they see that things may not be available to them that were available before. They might not be able to transfer money the way they were before. But is it really going to affect anything if they do have these tremendous sanctions against them? But I guess more importantly, the guys that have all the money, the oligarchs and whatever, I mean, they got their money hidden all over the place, right? I mean, isn't that really the way it works?
Of course. In Russia, if you're at the top, if you're in the Kremlin, let's say, you've never been affected. During Tsarist times, you were the Tsar, and you were in the Kremlin, everything was fine. In Soviet times, you were on the Politburo, you were in the Kremlin, things were fine. And now you're Putin or one of his buddies, and you're in the Kremlin, and you're fine. And if you're an oligarch and you've got your billions stashed away in a variety of places, which you would, because even a billionaire wants to be diversified. We think of being diversified by owning a little stock, some money in the bank, a mutual fund, whatever it might be. Well, they diversify by having some money in London, some money in Switzerland, some money in the U.S., some in Russia. I talk a lot about how the U.S. economy has been strong and U.S. interest rates have been low because we are a magnet for capital. In plain English, you live in Russia. You might like living there. Your family is there. You like the food. You grew up there. It's great. Does it mean you trust Putin? Not necessarily. You might be his buddy and still not trust him. Same thing in China. Money, capital is very mobile now. Think about what people send to the U.S., their two most precious things. If you're wealthy around the world, you send your children here to college. They have good schools overseas. You think the best ones are here, and you only send your kids to what you think will be best for them. That's a clear thing. The second thing people send here that you don't see is their money, directly or indirectly through investments in U.S. stocks, bonds, on our various exchanges, whatever it might be. Because for all the U.S. economy's faults, I would paraphrase Winston Churchill, who, when talking about democracy, said, it's the worst form of government that's ever been tried except for all of the others. And I'd say about the U.S. economy, it may be the worst economy in the entire world except for all of the others. So back to Russia and sanctions, it means that I'm not sure the sanctions will have much impact on the leaders in Russia, the wealthy people in Russia. If you live in the countryside, the Kremlin has never much cared about whether you lived or died, let alone whether you prospered. I always say Russia has a near unlimited capacity for suffering of its people.
Well, and one of the things you said is that we don't buy all that much stuff from Russia, but that's not the case with China.
No, we buy a ton of things from China.
Yeah, but that's a real problem. If you're talking about that's a real problem. I would imagine, especially with China, Taiwan, and whatever. I mean, there's lots of threats with that.
The problem there, what looks like a good part is it's a little bit like if you owe the bank a little bit of money and you can't pay, you've got a problem. You know where I'm going with this.
I know exactly where you.
But yeah. if you're the biggest borrower at that bank and you can't pay, the bank has the bigger problem.
Yeah.
And so that's true also of China. You know, they own our debt. We owe them a lot of money. That's a problem for them. Well, or a problem for us. It may be a bigger problem for them. And if we don't buy their stuff, it may be a big problem for them too, except to the extent that the Chinese are willing to let millions of people be out of work and suffer. They may not be. What China has always wanted to avoid is political and social turmoil. They want an even keel. And if millions of people get thrown out of work because you're not buying a new refrigerator, that could be a problem for them.
Well, wasn't that's Donald Trump's tactic way back when he almost went bankrupt? He says, "Well, if you're going to get 10 cents on the dollar if I go bankrupt, but lend me more money and I'll dig us out of here." Isn't that basically what he did?
Any clever debtor who's in trouble and who can bargain and who can make a deal, yeah, that's what you'll do.
So it's a better thing to have somebody owe you a lot of money because you're not going to write it off and you kind of squeeze them, huh?
That's absolutely right. If you're going to be a debtor, go big. Go big.
So let's do a little retail here. How do people get in touch with you and your services and your goods and your website and whatever? Go ahead.
Well, our main office and headquarters location has been at 1703 Monroe Avenue since 1969. And, of course, our main number, 585-473-3590, and our website, brightonsecurities.com. Now, that's our main location, but we also have offices in Batavia and Lockport and satellites in Buffalo and Jamestown.
Well, how many people do you have working for you all told?
I think now about 50.
Wow.
A little north of that, I guess.
Well, are you? And I know you can't say who they are, but you have some really substantial clients, I know.
We do.
Yeah, you do.
Although we also have Mr. and Mrs. Rochester. I mean, our core client base is Mr. and Mrs. Rochester, and now Mr. and Mrs. Batavia, Mr. and Mrs. Lockport, and so on. But we deal with people who live in every part of Monroe County and all the surrounding counties.
And one thing we talked about during the break, and going a completely different direction, you're a car guy.
I am. So are you.
Well, yeah, but tell everybody about your car club. we got about a minute to go.
All right. A minute ago, I bought a warehouse several years ago to use to store my cars, and I found out that the town it's in wouldn't let me have zoning approval. So I had I think a fairly clever lawyer, shout out to Chuck Steinman, and he said, well, in this town, if you're a not-for-profit club, they'll give you zoning approval. So I formed a not-for-profit club, and it was going to be a club of just one. And friends and associates who I know with old cars said, hey, can I store a car in there? And so it has become a real club. We have a good time. We have a couple of events per year, but there are 50 old cars. Everything from the oldest, I think, is a 1913 Hudson. Mm-hmm. There is a brand new Mercedes retractable hardtop convertible. It's just in there for the winter. But we have Chryslers and we have Fords and we have Chevys and Buicks and Subaru, 1969 Subaru, 1969 Saab, all kinds of crazy things.
Well, God bless you. I'd like to see that someday.
We'll get you there.
Okay. Well, thank you for coming in. It's been delightful and fun, and I've learned an awful lot, and I'm sure listeners have too.
Thank you. Well, I'm grateful to be your guest, and I hope somebody at least got something out of what I had to say.
I'm sure they did. And everybody, next week, 10 to 11, Saturday, the No Nonsense Roundtable. Thanks for listening.